And we are live. What's going on, everybody? Welcome to Wolf. Good to see everybody here. Really excited for this conversation. We've been doing all the podcasts lately, but I have with me Jeff Park, head of Alpha Strategies over at Bitwise. Jeff, I'm very, very excited to pick your brain a little bit, talk about the markets with you, as well as find out a little bit more about yourself and your whole journey to today in 2025. Thanks for coming on.
Yeah, thanks for having me, Cade. Nothing like to starting Monday with the Wolf community. So pumped to get this going.
Yes, sir. Yeah, Monday morning doing the podcast. Guy, you are a trooper. Right on. Well, listen.
Are we all in crypto world where we're
Oh,
working
man.
all the way through weekends, Mondays,
Yeah.
a Sundays, a Saturdays, a Friday?
Exactly. And actually, that's actually an interesting question, or kind of like leads me to this first question here. But, you came from the traditional finance world and you worked at a few different places before coming to Bitwise. I'm curious, what was that? You worked at Morgan Stanley, Harvard Management Company before diving into crypto. Was there like a defining moment that made you say, like, let me dive into this new asset class, digital assets, and, shape your bit of a career pivot, I guess?
Yeah. I would say I've always loved crypto from the very beginning. I discovered Bitcoin pretty early, actually amidst my Morgan Stanley years. As you may know, I lived through the great financial crisis as my first year in my job out of school. And so in a strange way, the existence of Bitcoin has also marked the beginning of my own traditional Wall Street career. And it's something that I've always enjoyed in the back of my mind, especially because I liked the idea of a new asset class being birthed where there would be financialization in ways that people may not understand. And you should pay attention to a big trend like that. And most people are very bad at assigning probabilities to improbable things, which is the entire point of options trading, as you may know, as to how I navigated my career. So I think for me, personally, I've been following crypto for a long time, investor for a long time, over a decade now. But on the professional front, it was really around 2017 when I started to spearhead the digital assets investing effort at my prior hedge fund. And it's in that conduit that I got to really see the full breadth of where dollars can go to work across the crypto arena versus liquid trading versus venture versus token trading versus crypto securities. At the time, you may remember financing mining in credit was also a big opportunity for traditional conduits of capital to come through. So there was a lot to do. But I'll always remember one of the most memorable advice I ever got in my career was from my first boss at Morgan Stanley. And he was the head of exotics trading, who ultimately would build an incredible career. And he told me upon the anniversary of my first year at Morgan Stanley that one of the skills you have to develop in your career is you actually have to have an awareness for recognizing what he used the French word for called fortune or fortune, or however he pronounced it in that French way. And what he was trying to intimate to me was that once in a while in your career, there's this chance encounter of something that is incredible, but most people don't actually recognize it happened. And part of what you have to do is you have to be ready to receive the opportunity and recognize it and then seize it. And I think in that sense, crypto has always been this elusive thing that I knew was really interesting, something I wanted to do full time, but also recognize when that time would be with the people you want to build it with at the firm that has the franchise and the ability to bring it to the next level. And all of those stars aligned for me when I discovered and joined Bitwise several years back now. And so I think in a way that was my full circle moment of going all in.
Wow, that is very okay. When I got into the industry, I came from I basically graduated college. I got this degree in public health, and I was like, okay, I don't know what to do with this thing. So I went and got a restaurant job, and my big wake up moment was I met a lot of the chefs there and a lot of the guys who had been there for 20 years, and talked a little bit about finances. And they were like, I remember we were talking about long term investing, retirement, things like that, and it broke my heart. But the head chef was talking about it, and I was like, okay, what kind of things have you invested in? He goes, oh, I don't have any investments. And I was like, oh, none at all? He's like, dude, I'm never going to retire. And I was just like a rock. I mean, you could have heard a pin hit the floor. I was just shocked at what he had said that. Just I saw his shoulders deflate a little bit, and I was just like, whoa, okay. I really have to pay attention because I just don't want to be in that position. Great guy, smart, just that side of the life he hadn't thought about too much. Mm-hmm. So And then I, just launched into this whole thing where I went on this journey and eventually found myself making content in the crypto industry. And now here at Wolf a few years later. But I never had like a mentor in those first few years. I didn't see other people doing it. I didn't know anybody within my circle who was doing like YouTube at the time and breaking into like the NFT industry, the crypto industry. So I basically said, okay, I'll just figure it out myself. Now, joining Wolf, I've been able to have some pretty great mentors here. And I feel like I've leveled up rather quickly. And I don't know if it was my ego telling me I should just do it myself or if it was just truly like, this is the way. But now I have a bit of a mixed opinion, I guess, on mentors. And you just mentioned yourself. You had some great advice really early on in your career. Do you believe that having a mentor in those first formative years makes more sense, or just doing it with yourself and kind of going through life yourself and figuring it out is more of like a profitable way? Could you speak on this, or if you have any thoughts?
Yeah, no one's really asked me this very explicitly the way you have, Kate, but I'm glad you did, because I do think this is something I do have a strong view on, and that is that mentorship is really important. This is something I do worry about a little bit. Ever since post-COVID, we've had a little bit of a challenge in imagining what the new office work culture should look like. And I would be lying if I didn't tell you some of my greatest relationships and knowledge transfer occurred on site because of the physical nature of how I surrounded myself with other smart people. I mean, the entire point of why a trading floor is organized the way it is, as a bullpen, is literally because you are in the middle of information osmosis. And by just physically being there, you learn so much. And I do think that when Jamie Dimon says people do need to come back to the office, what I think he's also intimating is that it's really especially perhaps important for young people, because mentorship doesn't happen virtually, right? Like, there's only so many Zoom calls you can have with your boss or your colleagues or your clients in a way to build true empathy and sense of longing and belonging with your fellow peers, that they would vouch for you and vice versa. That happens in the physical world. And, the reason mentorship is really important is because over time, they can level you up in humongous ways, right? Like, and the way that level up happens is they have to trust you. And frankly, the trust factor can only be built not just based on demonstrated competence, which is like the basic foundation, but the second thing, which is this someone that I can trust will actually be a person I can put my name behind, right? Can I anoint this person as a mentee such that, I also would not be at risk of the ways that mentorship would confluence to other great things. And that is a big unlock. I think everyone should look for mentors, and the models can look different now. It may not happen at the workplace. It might not be your direct boss. It could be people you meet on Twitter and virtually. And I would also say I've met great tons of people through Twitter in ways that they have adopted knowledge transfer for me and vice versa that I never thought would happen unless it was to be actually done on a space like Twitter virtually. So I think what young people have figured out is that, one, they know mentorship is important. Two, it may not look like the mentorship model that my parents had or what college taught you, but those that are scrappy, hungry, and capable are putting those pieces together and finding their own path. I think that's a lot of what crypto Twitter ultimately is really good at, which is coalition building around mentorship for those that you're able to trust.
Man, yeah. I watched Suits like a year ago, and the scene where you mentioned the bullpen with like all the traders, and like I remember like in the first seasons where like you're following the main character, he's down there like on the floor with all the interns and stuff, and I was like, man, I completely missed that. Like I basically graduated college at COVID, like peak COVID. I was graduating college, and then I worked at a restaurant for a little bit, and then I pretty much just dove into this like world where I basically just stare at monitors. And that's the only that's like the 90% of the engagement I have. So totally missed out on that front. In many ways, I wish I had it, but other ways I'm like, well, I guess I just didn't have it to move on with my life. What are some of those things that you picked up, learned, or still treasure from those first the first few years you mentioned, like in that bullpen, that experience? Because I bet a lot of people my age probably miss that, don't have too much of it. I mean, hopefully they do if they're not working online. But just from a personal curiosity standpoint, I just don't have that experience.
Well, the trading floor experience is in itself a little bit unique and may not be representative of general office culture. But one thing I will say is, 2008, 2009 was a challenging period because of the financial crisis, right? And so there was a reset of Wall Street culture pre and post. So I would hear stories about what trading floors used to be like pre-08 and what it became after. And the sense of loss in many ways that was noticeable in the people that were working there was the fraternity. And In general, some of my fondest memories, to be honest with you, is the ability to fraternize with your fellow friends and traders and do things in ways that you can build very long-lasting relationships with. I understand some of the cultural movement has moved away from the ability to kind of experience this kind of kinship at the level of making others uncomfortable, or the need to kind of be all embracing, all encompassing. But that sense of belonging that can come through fraternizing is actually, I think, really important. And I hope that in the future we are able to find a way to get that energy back, so that people can really feel like there's a strong sense of solidarity in the people that you get to work with, and a collaborative mission that we're all on the same team. I think one thing that got really lost post-COVID is that it's hard to feel really inside that you're a part of a bigger team, a bigger dream, a bigger effort. Everyone feels a little bit decentralized. Everyone's a little bit on their own agenda. And we need to find a way to like bring that culture back, because ultimately the people that I worked with 20 years ago are literally still some of my best friends. And it's really because of those formative years, much like you would say some of your college friends are still your best friends, even if you don't see them very often. The same is true in the workplace.
Yeah. Man, yeah, that is crazy stuff. I've actually heard similar things about, prior to everything, before the big crash and then after, in terms of culture and experience. I saw it was like one of the Wall Street traders went on and did this video on YouTube, and they had him react to various like movie scenes from some of those movies. Is that kind of like your take as well? He was like, yeah, it was kind of like that actually in some ways.
It was like, I mean, I'll give a fun example. We had an intern my first year, and we sent the intern to Philadelphia to buy a bunch of Philly cheesesteaks and bring it back for lunch. Because everyone wanted, Philly cheesesteak, and he wanted it from Philly, and he was going to go there, take the train, buy it, and bring it back. Is it an utter waste of his time? Absolutely. Is it totally impractical? 100%. But is there something really signaling about that person who's doing it with an open smile, and the idea that it's someone else, that they're all sharing, a little bit of hazing, but also a little bit of kind of, fun with it, and getting some social capital. And I think these things are really kind of important. And so, there was a lot of fun stuff like that. You can't imagine it now, right? You can't imagine the idea of like sending an intern to Philly to come back with a briefcase of Philly cheesesteaks. Like that might be a Wall Street Journal story cover, and then you might get fired. But I do reflect upon some of these things where some of these whimsical endeavors are exactly how people connect. And we must not forget these little moments are just as important, as long as you're not offending, crossing lines, or doing discriminatory things along the path.
Definitely. That's amazing. Especially lands a little bit here into like how you view the markets. You're in a pretty cool position. You've grinded to get to where you are today. I'm sure a lot of people are, follow you. They're like, man, would like to get to that level someday. And I want to pick your brain a little bit on how you sort of think about the market, how you look at it. So from your perspective, is there any like under the radar trends in the crypto space that you think could define the next decade? And how do you guys position for it? And then also, how do you find something like that? Like, what are the things that actually you're looking for? Like, separating alpha you see on Twitter that ends up not just being anything, just a big nothing burger, versus something you're like, hey, we should move a significant amount of our energy this direction.
Mm-hmm. Yeah. One thing I would say is this is something crypto is really, really good at. And one thing it's really good at is it's a really great sandbox to imagine different kinds of financial innovations. And the reason is because the permissionless nature of it really allows capital to flow in a really democratic way, where if something is actually really good, capital is just going to go there. And those little trends are important to pay attention to, because no matter what you think of the regulatory arena or the compliance agenda or the political mood, if there's interest and attention and it's growing, it probably is because it found some kind of product market fit. Like stablecoins is a really great example. Wall Street cares about it now because you have some ideas of what it could mean in the context of US Treasuries and money market funds, in the way that you have PayPal and Bank of America stepping in. But the reality is most people in crypto knew stablecoin was a big deal already, because it was being used really heavily. And these yield farming primitives at the first time might look a little toyish, a little gamey, but the reality is liquidity provisioning is a business. And if you were able to see, that's exactly what happens actually with most AMM pools in Virtu or Jane Street and vice versa. You would recognize from pattern recognition that these are really important trends. And so, I think my number one advice for folks is generally, know what we're bad at as humans, right? As humans, we're really bad at a few things. One, like we're really, really bad with exponential growth because there's not an easy way for us to think about things that grow exponentially. And so we're very bad at compounding things over a long period of time. And so you miss the big trends like the internet or AI or whatever. And then the second thing is we're actually also really bad at assigning probabilities to improbable events. So that's the other thing. Like if you don't think it's going to happen, most humans don't think it's going to happen. And so they actually probability of that black swan event. So the combination that I'm talking about here is that the underweighting of an event that is compounding at an exponential rate are both double whammy blind spots for the human people. And so all we have to do is rewire our brain, train ourselves to actively fight against those biases. And it takes time, but it's actually what trading is. The business of trading is trying to imagine probabilistic distribution of outcomes that you're thinking about every day. And options trading in particular is literally pricing optionality in that framework where the upside cases can sometimes be infinite, right? Like we're talking about infinite compounding of capital in certain scenarios. So I think my one advice would be to just rewire our brains to fight our active biases. By the way, like this is not a condition of fault to you or me. Like as humans, we were not going to live long enough to see most of these big trends play out as animals, right? Like, we're really gravitating what's right in front of us for survival. And it's really like in our genes that we're not really supposed to think this way. So you become a superhuman if you can kind of, step outside of your biological constraints and then take on a little bit of those capacity.
Definitely. I think I'd seen a post somewhere. I think it was you guys looking for a quant trader. And for the people out there, quant trading is like some foreign concept that only 0.001% of the industry. I think largely from I think it was The Big Short, where he says, "This is my quants. This is my quants." People are like, "What does that mean? And how do you become? Can you just learn this? Is this something you're just born with, like some superpower from anime or something? Or what is that? Like, what is that quant trading to you?"
That's so funny. By the way, I love that scene from the movie The Big Short. I know it's probably a scene that is somewhat divisive, but I find everything so hilarious about it, and I take it in great pride that that's what sometimes quants can mean for the public persona. Quant trading can mean a lot of different things, to be honest with you. There's no one categorical definition of what it means to be a quant. Some quants are traders, some quants are financial engineers, some quants are modelers, and they're all really different. So if you go to like a prop shop that is actually trading quantitative models, the quants themselves are actually not doing any trade, they're just building models. Whereas if you go to like a market maker and you're trading quant strategies there, you're essentially part of the execution engine. So it really depends. And there's no one size fits all for that definitional scope. The common trait I would share is that they have some technical domain expertise in the ability to bring some systematic strategies into applications. And so the person that I hired to my team is incredible. His name is Varun, and we filled that role with someone from Bridgewater. And it's actually the kinds of skills we need at a firm that is trying to actively grow into franchises beyond, just passive products and index products, right? You actually need alpha. And one of the ways you can get alpha in crypto is you develop a lot of toolings that can synthesize the incredible depth of public information. Because one of the beautiful things about crypto is that it's open, transparent, and there's a lot of footprints online for blockchain transactions. And so I do think the next wave of the most intelligent and curious quants will naturally gravitate towards crypto because they just love working with big public data sets in ways that historically the financial markets has actually been a closed loop, right? Like, you don't get Bloomberg. No, most normal people don't get Bloomberg. but the wealth of information in Bloomberg is moated. But imagine all the things you can do with that. Well, in crypto, it's not moated. It's all right in front of you.
Yeah.
You can find it all online.
Wow. Yeah, I think that scene made me laugh because I'm half Japanese, and my first few years in private school, I was the closest thing they had to an Asian at that school, and so I was the butt of all those jokes. So when I saw that scene, I laughed. So you mentioned like some of these passive and active, strategies that people have. So you guys manage, I believe, the world's largest crypto index fund. How do you balance these strategies? And could you talk if you have any newer products or things you guys have cooking, any alpha like that? Could you explain a little bit of how you guys think about it? And then if there's anything you currently have you can speak on?
Yeah, absolutely. So you're absolutely correct. We have the world's largest crypto index fund. It's our flagship product at Bitwise. It predates even the Bitcoin spot ETF. And it is essentially market cap weighted top 10 Bitcoin, top 10 crypto asset indexed exposure. So the general thesis is that there's a lot of interesting things happening in the crypto ecosystem, and you probably do want exposure to more than just Bitcoin, if you believe in the long-term thesis for what the industry can become. And we're providing a conduit for that in a sound manner where we have a lot of screening methodologies to eliminate bad assets, bad actors. I joke around often that in crypto, nothing is ever truly passive. Like even when you think you have a top 10 market cap weighted exposure, go on CoinGecko and look at what the top 10 market cap things are. And some of them are probably not things you want to include. So you do actually have to apply some discretionary screening. We're very proud of it. I think we have the best track record of what a top 10 token exposure fund could represent. And we've been doing it now for a long time, over 5 years. And the other new suite of products that I'm really excited about that we've launched very recently is volatility strategies. So I think most investors who come into crypto recognize two things. One, they understand Bitcoin, or they're curious about Bitcoin, and they really understand how that's a hedge to the general global trend of monetary debasement. And it is a necessary escape valve potentially in a way that you don't want to miss that boat if you think this is actually a bigger deal than we would worry that it shouldn't be. But then on top of that, what other people then recognize is it's actually really, really volatile, that exposure. And that volatility itself can be uncomfortable for many. But those who are true practitioners actually, recognize it's an incredible opportunity. So, for me, when I discovered Bitcoin back in 2013, I immediately fell in love with the volatility. I was like, wow, this thing trades so much size and so volatile, and it is literally like there's no market like this, where historically very volatile things tend to be very volatile because there's no liquidity. You see what I'm saying? Volatility and liquidity usually are on opposite sides of the equation. So when you see like private assets, they're liquid, and so they're not volatile. And so when you have the idea of like volatility, but it can also be super liquid, it's actually a pretty unique breakthrough, and Bitcoin represents that. So the volatility strategies we have 3 ETFs we launched 2 weeks ago, and it's on crypto securities. It's on MicroStrategy, it's on Coinbase, and it's on Marathon. Each represent a vertical of what are opportunities in crypto. MicroStrategy being a Bitcoin-backed treasury company strategy, Coinbase being, of course, the largest conglomerate play, if you will, in the crypto arena in the United States, and third, mining, as represented by Marathon, which is a big component of the Bitcoin supply chain. So all these 3 stocks, believe it or not, have higher volatility than Bitcoin because they have operating leverage. And because of this feature, if you're able to engage in volatility harvesting, you can generate some meaningful income that no securities would ever be able to compete with. So, for example, MicroStrategy's volatility can range anywhere from 60 to 200. And depending on that implied volatility, if you're able to trade different kinds of strategies around that volatility, you can actually generate meaningful income, like very well north of like numbers that you couldn't get trading on the S&P or the NASDAQ. So we're very excited about it. And I actually think that there's a whole class of investors too who are looking for the idea of yield that crypto can provide. And I'm just super proud that Bitwise now has that product to offer to our clients, where it's not just betting on the price. We all want the price to go up. Sign me up. But here's another thing that also is maybe accretive if price goes up, but not necessarily making that bet. It's actually making a bet on income, and the income, which would come from optimizing and taking advantage of what is a feature of crypto, it's high volatility.
Wow, I had never really, I guess I had known that, but I hadn't really thought about it the way you put. You're like volatility plus liquidity is rather that is a very interesting characteristic there of Bitcoin.
Yeah, I mean, if you look at the treasury market or the FX market, it's very deep, very liquid, but it's also very volatile, right? And that's because there's so much capital behind it. It's very rare for an asset to exhibit both of those characteristics. The closest comp, in my opinion, that comes to that is oil. Oil is very liquid, but it can be very volatile. And Bitcoin looks more like oil than it would look to almost any other commodity. Until recently, kind of also looks like gold. Gold had incredible volatility in the most recent quarter. But I would say it looks more like a commodity than it does look like any securities that we know.
Wow. Okay, that is really interesting because the whole conversation around gold had this massive run. People were like, oh, Bitcoin's next. Bitcoin. I've seen it on TV. Some of these bigger channels are now talking about it, decoupling. I've seen it all over Twitter Spaces, of course. The second any kind of separation, the decoupling is now the new move. Do you guys think about that at all? Is that like a term that comes up where you're seriously taking that into consideration, or is it way too early to be talking about something like that for Bitcoin?
I think we need to start talking about it because a lot of the nature of trading can sometimes be a little bit self-fulfilling. And so people need to believe in things for then it to become a reality. And it can only become something people believe if people start talking about it. So I do think the journey is a worthwhile one, and it's gotten better in the past few years than ever. Actually, I do think in the last 6 months, I've heard more people really become disillusioned with the 60-40 portfolio, the allocation of 60 to equities and 40 to bond. There was a moment when this broke down 2 years ago as well, and you heard a lot of people complaining that both equities and bond went down, so there was no protection, and why did this happen? What's wrong with the system? So people started to ask legitimate questions. It's actually the underpinning of why I published this radical portfolio theory, which you may or may not have seen, but it's something that is really near and dear to my heart because I want to help our investors understand and hedge for a future where the kinds of construct like that 60-40 may no longer be true. And we really have to start asking questions around well, why is it not true? And really at the underpinning of this problem is this idea of the things that crypto is now talking about in the macro community, right? Things like the dollar hegemony and the Triffin dilemma and fiscal dominance. All these concepts are related as to why the 60-40 is not behaving the way you were told that it should, in your 70s, 80s, and 90s. And in that sense, Bitcoin is smack middle of it. And I love that it's kind of the engine for people to even become students of macroeconomics and microeconomics too.
It's pretty fascinating. That whole world, I remember taking economics in high school. The worst. I had no life experience and no context, and it was taught out of context. So I guess it makes sense that I wasn't interested. But now the more I learn and I speak with people like you and they talk about macroeconomics, it is actually fascinating the way money flows and how people think about that. And you get a massive, it's like an edge. I spoke to this trader once and just talking about how he thinks about entering trades versus when he sits out. And he goes, and I think at that point, maybe we were even talking about meme coins or something really degenerate. But he mentioned, he was like, I would never enter a trade that I don't have some kind of edge in. He goes, I have to have an edge. He goes, otherwise you're pulling slots. He goes, it doesn't matter what you tell yourself. If you don't have an edge, you're pulling slots effectively. And it is interesting, talking about the investing world. And I've seen people talk. Yeah, please.
Yeah. No, totally. I was going to say something also, which is there's so much that I've learned through my own education over the years that I had to actively unlearn. I kid you not, that some of the things we're taught when we're very young as a way of facts are not actually facts. And you just assume they're facts because you're told that is a fact. And I'll give you really 3 examples. One was when I first discovered stocks, like equities. I think I was in 5th grade and I was trying to understand what is a stock. And I asked my dad about it. And my dad basically said, what is a textbook definition. You're a shareholder that is entitled to the profits of the company. Okay, sounds like a concept. And then I asked him, well, if I buy Microsoft stock, then does Bill Gates know who I am? Because I'm a shareholder. And he goes, no. I was like, well, why not? Like, I'm a shareholder. Like, shouldn't he know the people who is part of like the shareholder base? And he at the time couldn't explain it very well, but I will go on and learn eventually in Wall Street that no, he wouldn't, because I actually don't own the shares, right? And if you look at the plumbing of Wall Street, you'll realize you actually don't own those shares. It's held by the custodian in your name, in which it's trading as you as the beneficiary, but you are not on the books and records of the ledger of Microsoft that you're a shareholder. You don't actually own it. Really, to me, this is what crypto is all about. When we talk about tokenization and we talk about custodial models that becomes self-custody versus outsourcing, this is literally the root of that very fundamental question that a fifth grader would ask about what does it mean when I own a stock, and hearing things that make zero sense. Because I remember thinking like, well, it doesn't make no sense. Like, do I own it or do I not own it? If I own it, why doesn't he know I own it? Why can't he track it? And the second thing that I learned also that was really kind of mind-blowing was like with credit cards. And I remember my parents told me, whenever you want to buy something, use your credit card, don't use your debit card. And I asked like, well, why? And my parents explained the credit card is safer. It also like gives you points. So you kind of want to take advantage of that and just not use debit cards. But I was thinking to myself like, well, why am I getting paid to borrow if I can just pay with my debit card for the cash that I have? Like really, really, I think children and teenagers are intuitive. They ask the right questions. And a lot of time, what you see is the capitalist system built really weird things around it that defy intuition. And then you would learn eventually, oh, the credit card business is actually all about lending, and hopefully people are paying exorbitant rates. Some may default, but we're going to socialize it, whatever. It's a whole lending business. It's actually not a payments business. And I would say the third thing is like concepts like GDP. And this touches a little bit more on the things we're talking about here. But like, you're taught GDP is this thing that's like untouchable, right? Everyone talks about GDP as if it's like a sanctified acronym to mean productivity. But if you really, really study GDP, there's a lot of questions that people should be asking about it that nobody dares ask because it's part of like the academic literature and the nomenclature as we know it. One thing, for example, I would tell you is when the last GDP print came pretty badly, Besant and all of the media spokespeople were coming out and saying that GDP number is not real because there was a one-time adjustment to the net imports and exports based on the tariff war. I mean, that's literally kind of a mind-blowing thing to say because, how can you say this is a real number and also tell you it's not a real number because these things are happening? And so, everyone should really kind of try to level up in the ways to engage the dialogue on financial literacy. And I think also, again, crypto does a really good job of putting that interest in people that never once thought about it, which is great.
Wow. Yeah. Okay. That was a bunch of great points there. I hadn't thought about that in terms of if you hold the stock, do you own that stock versus crypto? So there was there's a concept that a lot of people talk about now, especially with, when you compare Bitcoin to like the majority of altcoins, Bitcoin has just outperformed them by a landslide. And a lot of people have spoken about valuing your portfolio in Satoshis and your Bitcoin allocation rather than any other crypto or even the US dollar. In many cases, you probably have to be pretty Bitcoin orange pilled to fully, value your net worth in Satoshis. At least that's what the average person would probably say. It's what my brain automatically thinks. Maybe that's something I need to unlearn. How do you think about that? Do you have any thoughts on that? Maybe not from a financial advisor moment here, but just like how your brain thinks about valuing a portfolio in Satoshis versus the dollar or whatever currency you use on a day-to-day basis.
Yeah, I think it's actually challenging for most people to rewire their brain to think about their financial health and net worths in denominations that isn't part of like your day-to-day use. So the reality is like most people still pay things in dollars and you care about dollar prices. And so it's very hard to think about like your wealth being Bitcoin denominated. I will say those who have succeeded at this more are those who tend to not be Americans, because actually if you're not an American and you don't even think about your local currency anymore as a way of life as you pay for those things, then you can actually do it because you're already used to it, right? So I'm saying, like, if you grew up in like Argentina, for example, and you just knew the price you were given is actually fake, all of those numbers don't mean anything. And there's actually a separate black market on like where the dollar is. And so you actually do have a concept of like dollar wealth, though you're spending pesos. You're actively training your brain to do this. But most Americans can't do it because Americans have been very lucky and privileged to live in a system where the unit of account is basically the most stable thing that you've ever known. Yeah. But if you leave this country, you'll find that there's tons of international people who don't trust their local currency the same way. And they do, in fact, do this mental calculation of like, oh, okay, but like, what is my worth in dollar terms, right? Because they care about that. And now what you're saying is, should we advance that further and say, not just dollar terms, like what is it in Bitcoin terms? And I think that could happen if in the future we see like more use of Bitcoin in ways that people are measuring productivity, like if GDP or things like that was measured in Bitcoin or something where it's denominated for like a common base, that could advance the dialogue. If Bitcoin is used for payments and purchases, that could, of course, obviously help the dialogue, though I don't imagine that's going to be the near-term use case for Bitcoin in general. But overall, this idea of thinking about, you know, your unit count of Bitcoin, I think is a really kind of nice thing because ultimately that is the feature about Bitcoin that is different than dollars. You know, there is only a fixed amount of Bitcoin in supply. So actually the count here really, really matters. It matters a lot more than the dollar, where you don't think about like how much count of dollar supply do I own, because the denominator is like obviously a scheme. And so there's actually very little use to thinking about it this way. But Bitcoin, actually, the count does matter because the denominator is fixed. And that training, I think, is actually quite important, that people do think of unit account bias when the actual inventory of things is a fixed quantity versus fiat, which is not fixed quantity.
Wow. Okay, wow, that is very cool. That is an interesting breakdown right there. This is why you're at Bitwise. This is why you guys. This is really cool to see how you think about
Bitwise. I think I just think about a lot of things and sit and see how it sticks with other people. But the reality is, you know, so much of crypto is rewiring your brain. You know, it's so much of relearning and unlearning things you know.
Wow. Okay, that was cool. I'm gonna have to take. I'm furiously taking notes here. This is really cool to listen back to. So, Bitcoin ETFs. You mentioned your crypto fund even outdates the Bitcoin ETFs, which absolutely, after a couple of months at least, exploded the markets. We went from like the 50K range to all the way up close to the six figures. It's a pretty transformative situation we got going on over there in terms of mainstream adoption. I would say even my grandfather would consider something like a Bitcoin ETF before Bitcoin, or at least opens the door to that conversation. Mm-hmm. Is there any surprising factors that you had, at least with the performance since these launched? Did you guys expect this to just absolutely send the way it has? And also the conversation around, you know, custodying your own Bitcoin, which you have on your ledger, versus, you know, a lot of people saying, okay, I'm down, get a little bit of exposure, but I feel much safer, you know, holding in this ETF, where these guys will actually buy it and hold it, and I'll just have, you know, a portion of these ETFs.
Yeah, I would say generally I'm not surprised. I think I've always known there's a huge demand for Bitcoin ETFs, and we know this because we hear it on the field. We have an incredible distribution team at Bitwise that talks to financial advisors every day, and we get to learn about what are their pain points. And so to me, the adoption itself wasn't a surprise. What I think did surprise me is still the resistance that is in place for some of these institutional brokerage systems. You may know the Bitcoin ETF is still not permissioned in certain brokerages. That is quite surprising to me, mostly because, one, it's an ETF, so it really is a financial product, and two, with kind of the reset of the political agenda and what the Trump administration has brought on providing fairness to the crypto industry, would feel to me like a moment to think you would be in the minority if you don't offer Bitcoin ETFs to your customers anymore. So I'm actually surprised by the lagging in that dimension. The thing that's useful about Bitcoin ETFs still versus Bitcoin spot to me is what you mentioned about your grandfather and actually most people, which is most people do not want to actually self-custody. And the inherent challenge in Bitcoin is it only works if you really self-custody at some level because of the censorship resistance that you're trying to inherently take advantage of. And I think this is the intellectual incongruence that can exist with the Bitcoin ETF wrapper. If you're buying the ETF, then what is it that you're actually tapping into versus the spot market? And then what I would say is two things. One, worrying about custody is a full-time job. You hear stories about people losing their Bitcoin, social engineered phishing attacks. You might lose the actual hardware. You might forget the keys. There's so many like human risks. And most people really don't like human risks. This actually goes back to what I shared earlier with my parents saying, hey, Jeff, use a credit card, not your debit card, because debit cards are actually unreversible. So if you F it up and you're not going to get that money back, a credit card, however, you can contest and dispute if something went wrong or the service wasn't rendered. So that lending margin of safety is valuable to the human psychology. It's the same thing with Bitcoin. The very beautiful thing about it being irreversible is the same exact very dangerous thing that humans cannot sometimes wrap their heads around. So I think the ETF bridges that gap. The second thing is this is ultimately financial assets, a financial product, Bitcoin that is, and you can actually do things with financial assets that are useful. So for example, if you wanted to lend out your Bitcoin, right now, you have to kind of lend it out to trusted counterparties and actually, ship out your coins. And, if you lent it out to the wrong party, then the Bitcoin's gone, right? I mean, this is literally banking. And there's some scariness to this. People have experienced it, right? We know what happened in the last cycle. I don't need to repeat it, but like lending can be a dangerous activity, but it can also be a profitable activity. And the ETFs take away the counterparty risk, right? Like the ETF actually is not something in which the counterparty has issues. It is financialized as a product where there's margin and clearing. So you're not taking on counterparty risk when you lend out your Bitcoin ETFs to the street and earn a yield. So that's a good thing. So there's other like financial features around the ETF that just plays very nicely with the capital markets that we know that's valuable for most investors. And that's why I would say most investors, practically speaking, in my opinion, should own the ETFs because there's a lot of financial benefits that come with that as well by being able to participate in the capital markets. But at the same time, if you're worried about kind of eminent domain type risk of wanting to not be part of the sovereign risk, then of course you should own Bitcoin non-custodially as well. This is the difference between having your own gold bars at home, which not the same thing as owning GLD ETF, the paper gold, and they're both valuable, but it just depends on what you're looking for.
Definitely. Yeah, makes sense. Honestly, for majority of people, and even if it's not something you want to happen, it's probably what will happen either way. Well, look, this has been an amazing conversation. I really have appreciated the time and the stories. Also, I didn't expect as many stories, but I love stories. I think it's way more powerful, honestly, to describe and get across a point. So if you go back, this would be like the last thing I asked, but if you could go back and give yourself, your younger self, one piece of advice before starting your career, entering the world, what would it be?
Oh man, what advice would I give to my younger self? I think I would echo a lot of things I already shared with you, which is, rewire your mindset to think differently from a probabilistic lens, double down on mentorship. I think those things are all things I want to live by and affirmed, and almost would doubly echo it's more important that I even would have known in my 20s. I guess if I had to pick one thing, I would say in general, the path to the future is not linear and it's not a straight line. And sometimes you're taught it looks like that early on. Like I think in some ways I had a very traditional kind of upbringing. I went to traditional schools and I had a traditional job, and there's kind of like a known kind of story to what that should look like, right? And maybe the one advice I would give is right now in the age of AI, nothing will ever be the same. And no one knows what the world is going to look like. No one knows what the future of human labor force is going to look like. No one knows what unemployment rate that the Fed keeps measuring is going to look like. Nobody knows. So actually, the thing that really matters to young people now that I will continue to espouse forever and ever is you absolutely need to attack every conventional things and try to rewrite the things you believe in for the world that you think is happening in front of you. Because if you live by things that people are telling you, everything is changing very fast. And the most important trait at this point in time is to have like a robust kind of capacity to think bigger and have the ability to adapt for an uncertain future.
Man, mic drop. Well, I will definitely be paying attention to that, and definitely right. With the age of AI, I think I'm just glad that I get to participate and watch this all happen in real time. It's going to be a crazy time to be alive.
100%. And crypto is an especially important place for young people because the whole virtue of crypto, in which it's permissionless and decentralized and gives kind of the ability for the value capture to happen directly to the individual contributor, all these things means ultimately it's empowering you, the person, and not the platform, and not kind of the B2B kind of enterprise solutions. It's about you, your data, and your contribution. And I can't think of something more powerful than crypto in the way that it's going to be a huge focus point in the conversations around AI in the future too. So keep doing the good work, Cade. Keep bringing in people and espousing these important things, and I'm sure it'll play a big role in setting everyone up for success.
Sounds good. Well, Jeff, I appreciate you coming on. Like I said, this is an excellent show. I learned a ton, and I hope other people did as well. And for anyone who's watching back home, please do like, retweet the stream, and also give them a follow if you're above. It should be above our faces on X. If you're watching, you can give them a follow on YouTube down below in the description. We'll catch you guys all in the next one. I hope you all have an amazing day. Jeff, thank you so much for coming on. Catch you guys all in the next one. Take care.